All right, all right. Welcome everybody. Every Wednesday we do this co-stream. We got Nick Gibbs from Investing Against the Grain. We've got Brian White from Future Aza. I think today's topic is a big one. I think it's a fun one. What we're talking about today, is it time? When will it happen that Tesla finally breaks away? Tesla has so many advantages over their so-called competitors, and its strategy that Tesla has is all coming to fruition. So let me just give you a quick list of all the things, and I'm sure this is not going to be complete, but we've got Tesla's 1010 event, the robotaxi event coming up very shortly, 50 days away from now. Full self-driving 12.5 series is looks like it's very, very good, and that's about to go wide release tonight, or at least this, by this weekend. Everybody, including Model 3 cars, will get this. The improvement is shocking. There's this more affordable vehicles that are coming. And remember when Elon talked about this, it was supposed to come by the end of this year, maybe, but certainly by the beginning of next year. You got announcement from Tesla, the China Megapack factory is now 40% built in just 3 months. That's a record. Tesla Energy, of course, showed up in the last quarter earnings report, such that institutional analysts, big whale investors can't ignore it now. They're all talking about it. And of course, we can't forget about the unboxed model. This is something that Tesla's been talking about. It's going to make waves. The 4680 battery has finally solved the problems. It's now in production. Meanwhile, let's talk about all the other car companies, and they are struggling. You got this inventory buildup for Ford and GM, well over 150 plus days of inventory. They can't hide that much longer. They can't stuff their dealers much longer. Ford just announced that they're canceling their all-new electric SUV, and they delayed their next-gen Ford electric vehicle truck to 2027. They're just not going to have any new vehicles at all for electric vehicles for 2 years or longer. Toyota made an announcement just last week, that they're going all hybrid. They are not going to be going into electric vehicles in force. They're going to buy themselves some time. They're going to stop building gas only cars, and they're going to build gas plus electric cars. That's their strategy. Meanwhile, BYD, their sales of electric vehicles only surpassed Tesla for 1 quarter. And so we'll see if they'll come back. So it's okay if we have competitors. My point today is, it sure looks like that Tesla's strategies is all coming together. When will we actually see this breakout? When will we actually see that, Tesla's strategy is real? So let's ask the panel here. Let's talk about this. So what do you think, Brian? Let's kick it off with you first.
Yeah. So we may see some new offerings from Ford, but what we're not going to see is new stuff from the ground up, which is what they desperately need. I've had people saying, look, all these protectionist measures we're seeing around the world are critical because China can build cars so much cheaper. And I say, right, but it's not because they're cheating. It's because they've got brand new factories using brand new methods, while in Europe and most of America, they're trying to retrofit old lines to build new products, and it's inefficient. It's grossly inefficient. Labor is cheaper in China, but only something like 10 to 15% of a car's cost is the labor. So even if the labor was completely free, which it is not, that would only give you a 10 to 15% price advantage. The real advantage is that they've spent decades building up their supply chain and years building up new factories that operate in new ways. Ford can't make the most compelling products unless they start from scratch. And what we're hearing them say is, well, we were going to do that by 2025, 6. Well, now it's going to be 2027. Are they? Are you really going to do it? Or are you going to just ride the hybrid gravy train into the ground? Because by switching to hybrids, they'll improve their fuel economy, which means they'll have less requirement to buy ZEV credits. And a reminder, Tesla's now over 10 billion in ZEV credits they have sold to their competitors. That makes almost all of the factories free. You guys could have just built your own factories, but why do that when you can chase next quarter's profits instead?
Yeah, but answer the question, when do you think that it's finally going to show up where Tesla's advantages actually just completely blow everybody out of the water? When does it show up in the stock? When does it show up in the business?
Well, I think it's already shown up in the stock substantially, but as a car company, they're already worth too much. I do not believe today's valuations because they're a car company. I think it's based on the other things, based on the Megapack production that's been doing very well, based on the Powerwalls, which are hitting new records for production and sales, and based on the next Megapack factory in China, which will be up and running in a matter of months. All of that plays into it before we even talk about autonomy, dojo, bots. There's a whole lot of headroom, and I think auto manufacturing is the least exciting thing that they do.
It's at least exciting, but I disagree with you in that it's okay. If you value Tesla as a car company, it's you're right that it's valued more than that. But the car industry itself is transforming, and you're seeing these other car companies dying. These big behemoth, the big six, the big legacy autos are dying, and they're not transitioning well. And so you're going to have a lot of Chinese car companies compete, but Tesla's going to come out of this as a big leader. It's going to end up becoming the Toyota of the old, so it doesn't that give it, yeah.
I think all those things are valid, but I don't see them dying. I see their pivot to hybrids being enough to keep them around at least until the end of the decade. But even if it's 2028, 29 before they start needing to get aggressive with their strategy, they'll survive quite well until then, because they're so profitable when it comes to making old, inefficient dyno burners.
Okay. So Bradford, welcome to the stream here. We're talking about when will Tesla actually break away. I listed out all the things that Tesla's doing in their strategy that's going correctly, going really well. In the meantime, I listed a number of lists of things that our competitors like GM, Ford, Toyota, even BYD are faltering on. When do you actually see Tesla's strategy working well and the competitors or the other markets not doing as well? When does it finally break away, both in the business and the stock? Let's kick it off to you, Nick.
I don't have an answer for that or speculation. What I'll say is, I agree with everything that Brian was saying. The problem with, at least stateside, with all these manufacturers, the big four, big three, is that no matter what they do, even if they were to clone everything Tesla's doing, there's still two things that they just can't seem to get out of. So one, they're stuck with the unions, and that's becoming a big detriment to them. And then the other part is just culture. You can't just change culture. You can't just get people to want to go and work there. You're not going to be able to attract the best talent. And no matter what they do, I don't see that changing, at least not in the next decade. And it's kind of a death by a thousand cuts, because while in the States, they still may be doing really well, and they'll double, I think they'll triple down here in the States. They're dying in the rest of the world. They're dying in China, in Europe, in South America. And so I don't know. I don't know when, because this hybrid transition, I think, is going to elongate before we really see EV becoming the way, just look at Toyota. They're pivoting, right? And you say what you will about hybrids or whatever, and Toyota, I will say Toyota is probably the one handling this the most gracefully right now, which is kind of, I wouldn't have picked that as a prediction for this year. So I don't know. I know that's kind of not answering your question, Herbert, but in due time.
Yeah, I guess I know that Brian says something that you're saying as well, is that in due time, these legacy car companies, some of them will survive. Toyota will survive. They'll last long, but the others, they'll still be hang on for a long time. This is where I disagree. If you look at the inventory buildup that is happening now, it takes 150 days for Ford to sell a car, and it's the same number for all the other. The only ones is Toyota is still at the 30 days. That means that they've been stuffing the dealerships for quarters prior to this. They can't do that as we move forward, and eventually it's just all going to fall like a house of cards. Like, it looks like that they're going to survive, and then all of a sudden they can't. That's might happen sooner than you think.
Yeah, that's a little bit of a different question, when they'll falter rather than when Tesla will recognize or be recognized. I just think to be honest, I think it's the wrong question. I think the right question is, when will FSD and robotaxi really proliferate? I think that will happen way before any of these OEMs die, or everyone just concedes that EV's the way. I think that'll happen way before.
Great point. Okay, Bradford, are you following with the theme of the show? You want to contribute?
You're on mute. The theme of the
I
show,
think I'm catching on.
speculation.
Sorry, I was late.
Yeah.
So, yeah, maybe I start with a thought, and then you ask me one question. So I think we're starting to see 1,000 cuts, death by 1,000 cuts. We got news today that Mercedes is dropping one line from their S class. I think this is in Germany, and it might only be relating to their full BEV version, or their platform, where they're doing it in a hybrid and a full BEV, that they've dropped down to one line or one shift, and the supplier is crying from that. We see Ford pulling back from their plan. Another 2-year delay. At least they're going to have some standards where they only want to start making the electric vehicle if they think they can start making money within a year, to have like this type of financial performance within a year. So they're not just going to make these weak attempts and then say, oh, look, we failed. So I think like having standards is like the first part for Ford. Now they need to engineer a product that's going to be profitable for them and reach sufficient scale that's going to have continued profitability. So I see the same issue you see, Herbert. We see rising inventories for these legacy makers, and they're closing more factories. They're reducing shifts. It's not looking good. There's some problems under the surface, and I agree with Nico that there's some serious cultural problems at play as well. So I'm curious where you want to ask from here.
Right. So I actually like what Nick said, right? Which is this wrong question. So it's like we shouldn't be looking at our competitors and seeing how they're faltering. And let's talk about this new world for Tesla, which we shall do, because Tesla's succeeding, it looks like, in so many different ways. But my point, I just wanted to just wrap it up with a bow here. If you guys don't agree with me, if Tesla is still a 90+% revenue is an auto business, and yet the auto market is collapsing and collapsing big time, does that not in any way set up Tesla very well for their strategy, right? Their strategy was build these more affordable vehicles that are coming very shortly, build smart vehicles, electric vehicles that are very profitable. And meanwhile, no one else can copy this. BYD is the only one that was able to be make profit. We think, we don't know how much they're actually subsidized by the government, but they only beat Tesla for 1 quarter, and then they fell big time too. So they need to catch back up. Not saying that they're not a competitor. There will be many competitors in China, but as these legacy autos collapse, does not that in any way, in your mind, yes, it's like the auto business, Tesla's not valued in that only, but what if the auto business completely changed and now you've got Tesla and Chinese companies taking over the world?
I think that's a fantastic pivot there, because today's strategy, we can't see past 1010. I can't see past it. If you'd like me to project past it, what I see is more of the same kind of stuff we're doing today. Crossover SUVs, maybe slightly smaller ones, maybe slightly bigger ones. But the fact that we haven't seen groundbreaking in Mexico, the fact that the expansion in Berlin is a logistics lot and not a factory, tells me that there is a pivot coming. And yes, if robotaxi is here within the next year and it works as expected, the world is going to change. And I don't know what that will mean for most companies. If that happens, we're looking at a real scramble to remain in business for everyone who doesn't have a robotaxi. And maybe Ford and GM and Mercedes go back to being, novelty vehicles. But the fact that we're seeing Mercedes scaling back their shifts for their S lines, the S class is a cash cow. It's a big seller for them. It's their marquee. And so I think, yeah, they're going to have to reinvent themselves, because all of those carriage builders who made even horse and buggy style carriages back before the internal combustion engine, but even the hand-built carriage builders that made things like the Dusseldorf prior to the Model T becoming a mass-produced vehicle, it's going to be a real tough time for them. And the good news is, at least for my portfolio, I feel like I'm already all in on the company that's best positioned to make hay out of that.
So just two thoughts on what you were saying, Herbert. So one, I think in order to deal with the channel stuffing, all they've done is delay what Tesla has been going through, right? Tesla doesn't have the luxury of stuff in channel. We all know this. I'm not going to dive into that. So they're going to be dealing with that now. It's as far as like EVs and all that, and what Ford's trying to do, and GM and Rivian, all again, I've kind of been a broken record on this, but it's, as far as I see, it's game set match, because the window that they had to get out there with a, not even a same profitability, but just at least net zero vehicle, that window is closing by the time Fed starts cutting rates. Because here, I mean, the way I say it, this is the domino effect. All right, everybody's dealing with their channel stuff, and Tesla doesn't have to. Here come the rate cuts. At the same time as we get into Q3 and Q4, Tesla's going to come out with robotaxi. Maybe that doesn't come out for another year, but they're going to start coming out with these lower cost vehicles right as we're dropping down rates. And so now they're going to be able to sell even more of these vehicles. It's going to be even harder for these other companies to compete, because now Tesla's going to have a more cost-effective vehicle at even a lower rate, and it's just going to propel itself. Imagine if they start actually getting Tesla insurance out there, and they start saying, hey, if you subscribe to FSD and have Tesla insurance, it's $200 a month, $300 a month. I mean, the games they can play are just nutty at that point. But so to me, as far as all that goes, it's over. Like there's nothing they're going to be able to do. So I don't know when does it happen? Who knows? But I just think the OEMs are just kind of screwed, and the only thing they can really do is move over into hybrids. And but just because they're full of vehicles on lots and all that X amount of days, that doesn't mean they're going to go out of business, right? I mean, just look at Target, Walmart. They all went through this where they had crazy inventory. They just had to slash prices and take it on the chin and kind of reset. And that's what will have to happen here as well.
I would add to that having all that inventory on the lots means that when rates are cut, they can move units without having to adjust their manufacturing. They can be a lot more reactive with their scaling up and down of manufacturing than Tesla, who would have to pivot on a dime, which they can, because Tesla will not have, months of unsold inventory waiting for rates to get cut. And to something Bradford said earlier, when the S-Class starts losing volume, they start losing their economies of scale, their purchasing power, and that creates the opposite of a virtue cycle. It creates a death spiral, and now all of a sudden you're having to sell the same car for a little more or with a little bit less margin, and you're still annoying your suppliers because you're not hitting the targets they were expecting.
Okay, perfect. So Nick, this is exactly what I wanted to hear. So you articulated that so perfectly well, right? Game, set, and match. It's this combination of what's happening where the auto industry is today, where Tesla is, and even if the auto survives and they get out of this, the world has already changed by then anyways. Tesla has already completely changed. So let's start talking about that then. What is Tesla doing? It seems to me that a lot of their strategies is all coming to fruition all about around the same time. And like you said, game, set, and match. They have won this. I'm a bull, and we're all bulls. And so we need to hear from the bears telling me that I'm being overly bullish, but tell me when I'm wrong. So maybe start with you, Bradford. What are the things that Tesla's doing, right? You got the 1010, you got the more affordable vehicles, you got the China Megapack factory, you got this unboxed model, you got FSD improving. it's sounding like they're headed in this new world in total dominance.
Yeah, so I think the thing that we've all forgotten is Tesla's relentless focus on cost has been the big game changer. So they sell the cars themselves. That saves $2,000 a car. They're vertically integrated. So the seat maker isn't making all this money off the seats, and they're not as dependent on suppliers. They can change the parts without having to negotiate with suppliers. All these things add up. They're the first to go really big into gigacasting. And, they're their own technology stack. They're not dependent on people like Green Hill Software to do the software in the car. They have one unifying piece of software for, over 150, components that need software. It's all these things that add up together that make it a really great product, but keep the cost down. Tesla is the only profitable EV maker globally that has any kind of scale. They're the only ones making EVs profitably. Even BYD, they're probably making their money off of hybrids and losing money on the EV side. So then, on top of this, all this AI work that they've been doing, banging their heads on the whole neural networks and self-driving, it's finally come to fruition where literally 12.5 for me drives me around my area of town better than I can drive it. Like lateral G's is like the forces you feel when you're doing the car, and there's the front and back G's when you're accelerating and decelerating. I literally cannot drive my car as smooth as 12.5 does. And for me, that's shocking. So like before we had the end-to-end AI, essentially you'd have these different rules fighting each other in the car. And I'm in this area with a bunch of roundabouts. So like in the middle of the roundabout, like the wheel would go like this because you had different rules fighting each other. But now it's like, it's so smooth. It's shocking. I'm like, did we just go through a roundabout? Cause like, I literally didn't feel anything in my body. It's really weird.
It's so funny you just said that. We were driving, so I'm in Florida, and we were driving down to somewhere called Anna Maria Island, and there's a roundabout there. And we were driving on FSD 12.5.1.3, 3.1, whatever it is. And I look in the rear view mirror just for some reason. I'm like, did we just go through a roundabout? I don't even remember that.
Yeah.
I was just it was just doing this thing, and I was just, I don't want to say zoned out, but you're just like, I didn't even acknowledge where in the past, like, you're definitely a little more hyper aware, but it was one of those moments I was like, whoa, it's funny you say that, because that literally just happened like about 2 weeks ago.
And as a comparison on 12.3.6, I would have maybe my watch or my phone charging, not my phone, I guess, because my phone would be on the inductive pad, but like my watch or something else charging on the center console, and 12.3.6 would eject it into the seat, onto the floor, whatever. And 12.5 does not do that.
So yeah, a great conversation. By the way, thank you both, all of you, and Bradford. Again, you were saying exactly what I wanted to hear because you articulated that so well. So part of the reason I wanted to do the show is if you look at all the things Tesla's been doing, and we follow them so closely, every single year they do something, and you know that you go, well, it didn't really impact sales. It's not really a big deal. And yet it's leading up. It's strategically why they're doing it. One simple example is my wife and I took her to test drive a Model 3 Performance, the new vehicle, and it's got the no stock thing, right? You gotta, like, no stocks anymore, and you gotta press the button for parking and to park, to go forward, to go reverse. And then I explained to her how the car actually knows if it's in a garage, it knows that it should be reverse, and so it'll actually set you up to be automatic reverse if you turn that on. And she says, why do they do this? Just leave everything alone. I just like things the way I know it. Well, why did Tesla do this? Why did they remove the stocks? Why did they have that? Because they're testing. The current cars now are being tested so that in robotaxi future, the car will have had enough testing to know if it should reverse, if it's in front of a garage, if it should move forward, what are those things, right? So these are little tiny things that Tesla's doing with the app. The other thing they just did recently, just announced yesterday, is they have a brand new bundle, right? They're calling it the Drive Anywhere package. And now you can buy for $5,000. If you have a Model S or Model X, you can buy in a bundle, $5,000 for 3 years. You get as much supercharging as you want, premium connectivity, and full self-driving as a bundle. So sure, standalone, it's a great little, upcharge to customers. Why are they doing this though? It's another small little thing they're doing that's leading towards a subscription model. And eventually they'll add and make this thing. I love it. I can't remember what the slide is. This guy, Tesla Yoda. Eventually it'll be called Ride Anywhere model, right? It's a subscription you buy to get driven instead of you driving. I think it's fun. But all these little things that they're doing strategically, that's a 1,000 cuts, but it's the opposite thing. 1,000 little things that they add on to eventually just come to fruition one day. And then people go, that's what they've been doing all along. It just feels to me that it's all coming together at the right time. You guys have any thoughts on that?
My only thought is, like, I like this because it encompasses more than just FSD, but I feel like a really great way to be able to, just no pun intended, but just on the margins, increased margins would be if they would open up FSD as far as, sorry, my words are escaping me. Instead of having a subscription, like you can have a subscription, right? Like say a subscription costs $99 a month, but where if I don't have FSD, I can still turn it on and it'll charge me by the mile or by the minute. I don't know, however, but just to lower the bar of entry for people to experience it. And some people don't want to pay month to month, right? And some people might just want to use it for a drive here or there, just show their friends, and hey, enough people do that, that can be meaningful and it could eventually lead into adoption. Make it more expensive than what it would be for a monthly basis, right? Monthly's $99. So maybe, you charge it, I don't know, X amount of dollars or cents per mile. I'd have to do the math real quick, but I think that would be cool. Really low friction. Just I can turn it on when I want. I can turn it off when I don't want it.
My concern with that is it puts a financial incentive to less safe driving. I don't feel like spending the extra buck or 5 or 10. I'm going to drive less safely as a meat operator over a supervised situation, and I'd be concerned about that.
I'm not following that at all.
I understand, but I know people who will sit in an unair conditioned car with the windows up because they're hypermiling because they want to save 2 pennies while roasting to death. People are not always rational.
What I like about this is that this is great for people who live in the city who don't yet have a supercharger in their garage, or they live in an apartment complex. They don't have the ability to, maybe they could drop a line to their car, but it wouldn't be like very strong, and they need to go to a supercharger on a weekly or maybe twice a week. I think this is a great package for people in the city. But also speaking to what you're saying, Herbert, is it's yet another package. It's yet another experiment where Tesla's getting people ready to think about things in a different way.
Let me share something that Jeff Lutz discovered, and we did a show on it Monday. He discovered that you can basically, if you bundle it with insurance, which he has. So he has Tesla insurance in Chicago, Illinois. And then the more he uses FSD, his insurance fell by $100, which is the price of the FSD subscription. So let me share this with you. He said this: Tesla insurance is paying for most or all of the monthly cost of FSD in my case. He started paying $163 per month for his insurance for his Model X Plaid when his driving score was 90. When you drive a Tesla, you get a safety score. His safety score was 90. But as he started using FSD 12.5, just by using FSD, because it's actually safer to use it than not using it, it drove his safety driving score to 100 in just over a few months. It lowered his monthly premiums for his insurance by $70. So here's what happened. He was paying $110 per month in August. And by September, this is what he will be paying in August. by September, it's going to be now 93 because he hit a safety score of 100 instead of 97 because he kept using FSD so much. So this is what he shared was he initially was paying $160 a month in insurance through Tesla Insurance. And every month it has fallen. And this is what his projected month is going to be. And it's like over $100 difference now just because he was using FSD. So this is yet another thing that Tesla has planned ahead of time, that if you can bundle Tesla insurance with full self-driving, if it can show that it's you're driving safer, you should pay less insurance. So you combine that with this bundled subscription of this Drive Anywhere program, then you got insurance added to it. It's like a game, set, and match. Like you said, this is headed towards a subscription-based business, not a one-time vehicle sales program.
I got a question for Bradford along the same lines. Why do you think Tesla has slowed down the rollout of insurance? Like, have you and Matt and anyone like dove into that? Because as a Floridian, I can tell you our insurance is not cheap here. And
No.
as far as we can tell, everything's a go. The only roadblock we have, I think, is that the state requires if you're going to provide auto insurance, you also have to provide home insurance. I don't know if that's true, but I believe that's the case, and that's the holdup. But that's just Florida. The rest of the states, like, why haven't we scaled? I get state by state and all that, right? But any thoughts?
Yeah, those state approvals can take a while. Insurance has been very difficult recently for both car and home insurance. We're investors in Lemonade. And like Florida and California have been a mess. There's been some disasters in Texas that have been a mess for home insurance. So like home and auto have been really hard. Also, just cars in general have gotten much more expensive to insure. So all the ultrasonics that Tesla got rid of, those make cars really expensive to repair. Prior to buying a Model X in 2019, I owned an Acura MDX 2017 that had the adaptive cruise control. That's why I got it, and it had the eight sensors around the little radars. And I got into some fender bender, and it took like 2 months to get my car back. And even once I got it back, the ultrasonics weren't working right, so they had to take it for an additional few weeks. Like. This makes it way more expensive. So Tesla got rid of those. So that's just another notch.
Yeah.
Best part so far. Tesla.
Yeah.
So I think that might be what the setback is auto's been extremely difficult. And I think maybe there's been some gnashing of teeth at Tesla, or some second guessing, maybe without fully understanding that it's not their fault necessarily. So they might be wondering, okay, did we screw something up, or are we doing it wrong? So they started at a difficult time. But I think, the advances they're making in Texas and Illinois, it's really good. They're collecting data on that. So, maybe they're just wanting more data before they move further forward. But we also lost Zach. Maybe Zach was wanting Tesla insurance to go bigger. Who knows? But he was a big champion of that.
Isn't it part of the strategy though? That's when you launch Robotaxi, which could be about a year from now, wouldn't you need to have covered insurance in as many states as possible, depending on where you launch it, right? This is part and parcel of it, or do you think you don't need the Tesla insurance to do that?
I'm not sure they would need to sell insurance. So for Tesla might just agree to take on the liability. And I'm not a lawyer. I'm not an insurance lawyer, but I think they would just say, hey, once you click on the app, go make me some money, work as a robotaxi. I think Tesla would take the liability on at that point. So they would cover any repairs. That's what I think would happen. And that's would be Tesla's justification for taking like something like 30% of the revenue. So, and I think there'll be plenty of gravy for Tesla to cover repairs. So I think they start at $1.50 a mile or higher. So that would give Tesla 45 cents a mile or more to cover insurance.
Wow. Bradford, somebody here dive deeper into that? Because if that's true, what you just said, then maybe they don't need to do Tesla insurance anymore, Nick. Why would they need to do Tesla insurance for regular cars if the future is robotaxi? Um,
Yeah. Yeah. I didn't want to lead the witness, so I didn't want to. That's been my fear.
on the
That's been
witness,
my
I
fear.
got
Yeah.
led through this. I was
No,
like, "What?"
no. When I asked Bradford, I want to see what he would say. But that's been my fear, is that, the same way where I said the wrong question is about, EVs and all that. It's, why would we waste time doing insurance anymore if we're just going to essentially self-insure, and that's all that really matters at that point once we have FSD and we have robo taxis. Like, it's.
So yeah, a couple more points. So I think there is a need for car insurance for when it's not, for the 2 million Teslas that are not robo taxis that are on the road. And you do need those Teslas on the road. Yes, they're held in the hands of many casual Tesla owners who may not put it on the network at first or know about the robotaxi network, but they will be critical for basically blanketing each city to the point where it's 2 minutes of wait for that Tesla to come by and pick you up. So I think that's a key thing. But then when those cars are not being used on the robotaxi network, you need insurance for that point.
Yeah, but
This is just a side tangent, but like Charlie Munger commented on, I think he did, about autonomous cars, and they said it'd be very expensive to repair them.
Yes.
And I think they're thinking about it wrong, because they're thinking, well, okay, if autonomous cars are making all this money and you're not paying a driver, then then that means the value of them is very high. But that's, the value of the car isn't the same as the cost to repair. So even if your robotaxi could potentially make 20 or 50 grand in a year, that doesn't suddenly make the bumper more expensive to replace. So I think they're not really thinking about the cost to insure these the correct way. I don't think it'll
yeah,
be expensive for Tesla to insure the robotaxi fleet. It'll certainly be a risk, and it'll be something that people will be worried about at first. But then once we get more data, I think people would get more comfortable with it. And as Tesla transparently shared, what those costs look like, I think people would get more comfortable with it.
yeah. My thought was, to your point, there's always a learning curve with everything that's new. But with Uber, right, when people are using their vehicles, like, I've never done Uber, but my understanding is that you have to let your insurance provider know. Like, every time I call to renew my insurance or anything, they ask, are you going to be using this for Uber or any ride lift or sharing? So they obviously take that into account for some type of premium or to put you in some type of bucket. So I imagine, even if you were self-insuring, like I have USAA, that they would get to a point where, okay, well, is this going to be you could put this into a robo taxi, whatever. And I could see there being a, shaking of hands between like Tesla and USAA, where they say, okay, well, we will share with you data that we get there. You'll be able to see everything we see. You'll get it right away. You'll be able to see what's happening inside the vehicle, or anything that's pertinent towards an insurance claim, to make it on the up and up. But I would imagine insurance providers would actually prefer that, because theoretically it's safer, which means it's like I'm just selling puts all day, but guess what? I never get in the money. I just collect premium left and right. So I kind of imagine that's how insurance companies would see it.
Maybe we could go to back to what your line of thinking, Herbert, is. Maybe we could talk about unsupervised from here, and maybe talk about like being in the seat and not needing to supervise, to not be needing to be in the seat. Maybe Is that where you're wanting to go from here, or not quite?
Sure, go ahead. What do you mean though? Like I do want to understand the things that is going to happen now.
Mhm.
Like Nick was what he was projecting, what's going to happen from now because of all of Tesla's strategy. Like one example is I was going to ask you guys is, do you guys know how many cars that Tesla sells and lease? Because one of their strategies they've been doing is they don't let you buy that leased car. So they've been accumulating this inventory of leased cars, right? Like they're doing that because presumably when Robotaxi launches, they have a inventory. But do we know how big of inventory that is?
Yeah, that would be in their financials. I think they're selling those cars on an ongoing basis. So when you see the used Teslas, it's not just people trading in to buy a new Tesla. That's not just where that used inventory is coming from. It's also from cars that are coming off lease.
Okay.
So I think up until now they've been selling those cars. I don't think there's like an army of Teslas waiting somewhere. There might be a small thing for that Elon's keeping on the side, but I gotta think that would be on the small side.
Okay. Okay. Go ahead and tell us what you think is going to happen next with unsupervised to supervised. Yeah.
Yeah. So I was talking about how smooth it was. I think Tesla is very close, and I've been thinking even more about this, and there's been some folks talking about this. There's an account on Twitter called Raines, Raines, that talks about FSD, and his thought is that there's a lot of close calls we have as humans when we're driving, and we're like, it's like a hair raising moment where we hit the brakes, we honk at someone, or we realize car beeps at us and we realize we weren't paying as much attention as we should have.
Right.
That's a critical disengagement. But somehow we all think we're perfect drivers, and we don't have, as humans, we don't have critical disengagements for 500,000 miles because we're not getting in an actual accident. But that's a critical disengagement. I think the 12.5 is very close to where humans are with critical disengagements, where we're needing to intervene at that point. And so I think we're at that. And I was recently driving my Cybertruck as after a movie, and Cybertruck doesn't have self-driving yet. So I was meat driving it, right? And we were killing a little time because we had a babysitter. We didn't want to come back before the kids were asleep. Yeah. So we were killing a little time, and I wasn't paying them as much attention as I should. And 3 times my wife yelled at me, "Oh, watch out for that. Watch out for this." And that was 3 times in like 10 miles.
Right.
So those were potentially 3 critical disengagements on a human driver in 10 miles. Mm-hmm. And most of you are thinking, okay, I'm not that bad of a driver or whatever, but we kind of are. So I think we're close to a time where you'll be able to sit in the chair and Tesla will beep at you when you get close to your destination, so that maybe you take over in the parking lot, or you take over to pull in or something like that, or you take over to end the ride so that the car fully parks. So that's not fully unsupervised. You're still in the seat. But I think it could be an in-between. And then I feel like next summer we could be at a spot where we're fully unsupervised, where you don't have to be in that seat.
Yeah, I think we'll be at full unsupervised at the end of this year. I mean, based on what I'm 12.5, I do think that you'll still have to be in the passenger seat for a time period, but I think we'll get there. As far as I'm concerned, the only thing that we need right now is to be able to reverse, because a few times where I take over, it's like, oh damn, it's a dead end, or they have a roadblock or something, and it's not on this map because it's new, and it's like I have to back us out. But it's funny you say about the human critical disengagement, I was leaving the gym with my wife on Saturday, and I was sweaty, so I just hadn't put my seatbelt on yet. And I'm sitting there driving out, trying to put in, destination for our house. And I'm sitting there, I'm getting like Slack messages on my phone. And I'm sitting there driving, and it's an unprotected left-hand turn. I'm sitting there I'm looking, and I almost go, and it's like really hard because there's construction, so you can't see the cars coming. And I almost take us out in there. I'm like, oh my God, what am I doing? I almost got hit. I'm like,
Mhm.
what am I doing? I have like to turn on FSD. I'm like, I'm being stupid. Put my seatbelt on, hit FSD on. Like, why am I even taking this risk? So that's a perfect example of you're talking about, Bradford. It was me, meat driving, being dumb. Like, yes, can I be a perfect driver if it's all I'm focused on? I'm perfectly attentive. Yeah, maybe. But even then, guess what? If I'm looking to the right, I can't look at the left at the same time. But I just feel like I think I just look. We're in August. We got think of how far we've come from January to August. It's 8 months. We've got half that time left for the rest of the year. And again, I don't know about you, but the only time I really have to take over, good point. If it's like a diagonal parking, okay, for some reason we can't diagonal park and pull in. I don't know why, but it's backing out. It's like backing up, and that's the only time I really need to take over. So I'm just I'm really optimistic that we'll see that by the end of this year.
All right, well, let's carry that forward. So, again, the theme of today's show is all these strategies that Tesla's doing seem to be improving and moving very quickly. Let's just assume that robotaxi will not be available like a real paid pilot until next year, probably even late half of next year, right? And so, will they? I'm not one to agree with those who say that they're going to launch robotaxi, as in you, the driver, as an Uber. People like us will still be driving somebody or unsupervised supervised driving somebody. They're not going to do that, but some people believe that that's the case. But let's just say that you're right, Nick, and Bradford. By the end of this year, everybody is using supervised FSD, but it's gone so good, and everybody's just raving about it. Is that enough to convince institutional investors? Just this weekend, we had Piper Sandler come out with a new note, and they said buy Tesla before the 1010 event because they did a deep dive with that FSD tracker, community tracker, and they took a look at that, and they were convinced just from that data that the improvement in FSD is actually happening. And so here's Piper Sandler, an institutional analyst who has been fairly neutral about this for so long, finally saying buy Tesla before 1010. They're buying into it now. Will this continue on just by continued experiences by FSD beta testers?
Good, Nico.
Oh, I was gonna say, Brian or Bradford, you guys speak about this. I don't. Go
Sure,
ahead.
I'll jump in. I don't trust the analysts. I don't understand what the separation between their stated motivation and their actual motivation
Good
is.
point.
It's always, with all these events, it's always buy the rumor, sell the news. And it almost feels like they're trying to hype the rumor so they can sell the news. So I don't know what their real motivation is. And companies, I don't know about Piper Sandler, but others have been caught acting not in the best interest of their clients for their own personal gain. I would like to know what they saw that we haven't. I think it's insane that, well, a lot of times there are analyst private tours that are held where analysts are brought in to see the factory, to see behind the curtain in ways we can't, whether it's institutional investors or analysts, and they come out with interesting perspectives that are not available to us. And I think it's pretty insane that that the YouTube and X community doesn't get ambassadors to be part of those experiences. But
That's a good point. That's a really good point.
Well, and when Sandy's takeaway from Investor Day, because I think it was Investor Day where all the analysts and institutionals were brought in, was he heard multiple people saying, where in the hell is the shrimp platter? And Sandy was saying, that's the important part to you. And if you just looked around the video of the actual broadcast, the crowd was bored. What are we even doing here? This is nerd stuff. Guys, this is what a squandered opportunity. You can ask any question and get the closest thing to an inside answer that exists. It was just a real squandered pile of possibilities.
Yeah, so I think I'm a little pessimistic about, when the stock is going to catch on to how good Tesla AI is and what that means. People need analysts, they need storytellers to connect the dots for them. And people may have heard this, but I'll repeat it here. Uber did a study back in 2021 or so where they experimented with the price of a ride, and this will make sense here in a second. So they looked at the demand when it was priced at $2 a mile versus the demand when it was priced at $1 a mile. And this speaks to like how big is the opportunity. And right now, Uber and Lyft, they're typically priced at $2 a mile. And then the driver gets like $1 a mile or something like that, or maybe a little better. But what they found was demand at $1 a mile was 25 times higher.
Wow.
25 times higher.
Yeah.
I drove Uber and Lyft, and I did this recently. I did it with the Cybertruck. I did it with the Model Y, and I did it to see, what the ridership is like, what the experience is like, and it's a lot of working class people that are using it. Initially, this is not a discussion about replacing cars. There is a ton of demand for rideshare that is not being filled and is going to help a lot of people. And if Tesla offers this at $1.50 a mile, it's going to be tremendously successful and it'll be great financially for Tesla. But they could even do it at $2 a mile, but they could make it like the old Uber and Lyft was. Like when they were competing coming out of COVID, like I could get a ride in 2 minutes wherever I was. And it's great. So this market is so big, people don't realize how big it is, and it's not a discussion about replacing cars for a long time. And when a storyteller can tell the people about the economics and the profits of it for Tesla, what it means financially, and then people begin to connect the dots, I think that's where the stock goes. So yeah, I don't know when it'll happen. I know Tesla's going to show us a vehicle on 1010. It's going to look cool. It's going to look like something people are going to want to get video and photo going into and coming out of, whenever it's available in your area. Maybe they'll start making it sooner than we expect. And there like a new line going in at Giga Texas on the 3rd floor or something. Joe Tickmeyer is talking about that. Brian, do you have anything on that?
I don't have any more information than what he has, but yes, it feels like there is a line going in up there that would be for something that is not a Cybertruck or a Model Y. So is it a robot? Is it a car? I'm of the opinion it is a car, and it is probably, my speculation is that it is the pilot production line for whatever it is that comes next. And the big thing I'm looking for on that is we haven't seen any leaks, any spy shots, nothing. And the only time we've never seen a spy shot was Cybertruck. And the reason I think that is because the people who were permitted to see it didn't believe it was real. If I leak this weird wedge, I'm going to look like such a dumbass. And no, here we are. It's the real thing. So I think whatever we see is going to be, I think it's going to be out there. And I don't know what it could be, but I'm excited.
Herbert, just to go back to your question about when the market will recognize, when Wall Street will recognize. I don't have the answer to that, obviously, but if I had to, put my speculation hat on, that's what this is, by the way, speculation hat. I would say it's going to happen within the next year.
Yep.
We've seen the analysts on the earnings call do a dramatic 180 on their questions. We had Q1, which nobody saw that type of delivery miss, and the stock rallied after that earnings call. We had Q2. It was kind of a miss, kind of not a miss, kind of some things were disappointing. And honestly, I didn't think the call was that special or anything. Yet you have people like Jim Cramer talking about how it was the best call Elon's ever done and all this. So, and again, all the questions were all about robotaxi, FSD, autonomy. So they've changed. The question now is, when will they see enough where they will start to actually put it into their numbers? And this honestly, it's funny because if I wasn't invested in Tesla the way I am, I've always believed that the market is efficient, that the market is really good at pricing things in, that the market essentially knows everything that's out there more or less in real time. But with Tesla, I use FSD. I mean, Brian and Bradford, you guys use 12.5. You use it every day. You see how good it is. And everybody can say, yeah, but you're just one person. You're just one use case or one an anecdote. You can say that, but I call BS on that type of thinking because it's real. I use it every day. I go everywhere. I've driven to Boston. I've driven to New York. I've gone everywhere. And that was even with other versions. Like, I see what this thing is doing, what it can do. And I don't think the market is efficient when it comes to Tesla. So it's kind of a contradiction in my own mind, because I do think the market's efficient. Like today's labor number revision, right? Market didn't do anything about it because they knew it was already baked in. But for some reason, FSD is not baked in. So I think it happens within the next 4 quarters.
Okay. I will jump in and tell you when exactly I think it's going to happen. It's going to happen.
Exactly?
Exactly.
I want times.
February 2025.
What time?
I'm going to give you the first quarter of 2025. It's when the more affordable vehicles are not only announced, but actually available for sale. Why does this need to happen? Because Tesla is a story stock. We've been talking about how FSD and all the strategies that Tesla has been doing, and they keep coming out with. We just haven't, Tesla Energy, Megapack factories, 40% complete. Nothing happens. Nobody cares until they settle in with their main business, the auto business. And when they launch the affordable vehicles, that is a signal for investors. Tesla's an auto company. It's now they got these new segments. That's about to grow, maybe even 50% growth again. Now I can go ahead and invest in these promises of FSD. And meanwhile, in the last 8 months, which is August till February or first quarter of next year, you're going to see FSD continue to improve. You're going to see the bots being produced. You're going to see more energy megapack factories announced. That investment for those things will come in only after you've stabilized your vehicle market. And that will only happen when the affordable vehicles are announced and actually set for sale.
And I would disagree with the idea that it isn't baked in, because for a lot of retail investors like myself, I have assigned value. The reason I am not selling at these amazing, valuations is because I still see more value coming from that. Institutionals, I would agree, a lot of them do not assign much, if any, value. But they still make up a minority of shareholders. So I think it's harder to speak on behalf of all shareholders when there's a whole lot of us.
Well, I disagree with you. The stock is at $200, Brian. So if you think that you're assigning value for FSD when the stock is at $200, you'll say to me, oh, as an auto business, it's only worth $100, so I am assigning value. No, the value of robotaxi and FSD is so much more than
right,
$500
that's why I'm not
to
selling.
$1,000.
That's
No, I
why
know,
I'm not
but
selling.
it's not baked in. There's nothing part of it baked in.
Right, but I'm out of powder. All of us all-ins are out of powder. It's not like we're saying now we're going to jump in. We already jumped in.
Start up your OnlyFans again, Brian.
Well, it was an only fan, but that one guy in Sarasota was so generous.
Oh, nice.
Any comments on that, Bradford, what I said?
Or what I said.
I need to dash soon. What I'll say is there are people who are all in that don't have all their chips in. So they're holding off whether to buy a dip, or they're holding off for some kind of additional evidence. I've done some surveys on X. I know they're not, scientific, but that's what I hear from people. So I do think there's some bulls that are holding some back, and I agree with you, Herbert. I agree. Tesla's a bit of a story stock, and typically people need proof with their investment before they believe. They won't use a little creativity, a little forward thinking, and kind of think of it in advance. So like for now, it's our secret. And if you told me in 2021 that like self-driving would be this good and the public not realize it, I would have like called you a liar. And so I think this is a great opportunity that we have, or just like great insight that we're able to share.
Okay, good. Thank you, Bradford Ferguson's with Rebellionaire. You got Nick. Check out his YouTube channel, Investing Against the Grain, and Future Aza, Brian White, and me. Thank you, guys. We'll do it again next week on Wednesday. Bye, everyone.
Cheers.